And this is Chris with MustangStocks. Over the past couple months, I've been asked by many people to provide some training and teaching them about the stock market, everything from long-term to short-term investing and trading and options trading and swings trades and all this stuff. So I figured I would take all my information and knowledge that I have and put it on a YouTube channel for you to go ahead and like and subscribe. And this is just the first of many videos that I plan on making. I will do some live streaming over Twitch and provide information via the Discord. Again, those will be linked below. So feel free to stop by. I'm not a financial expert by any means, but I enjoy doing this. I enjoy messing around with the stock market, and I definitely enjoy making a whole bunch of money, which is ultimately our goal. So if you ever have any questions or comments, feel free to ask away, provide any comments you want, and hopefully we can take all our knowledge base together and bring everything to make a bunch of money. So without further ado, let's get started. All right, I'm back. So the first big question that everybody asks me is, how do I get started? How do I start trading with the stock market? What's the best and easiest way to get started? All right, well, now they've made it so easy. I don't have to worry about trying to find a broker. I can just go online and download an app. Some of the bigger ones right now, TD Ameritrade, Robinhood, Webull, those are the three that I use currently. I have various portfolios and profiles in all of those. You can follow my links below for Robinhood and Webull. They have a promotion going on. If you sign up using my link, then you get free stocks and I get a free stock, which is pretty cool. Webull, I think right now you can get 4 free stocks. Some of them are a chance to get things like Google and Facebook. So pretty big blue chip stocks in my opinion. And I think you get 4 of them, I'll get 1 of them. So that's an easy way to get started. You just follow the link, fill out the information, and you set up your profile. You make your first deposit. I think it's $100. You deposit $100 and you get those free stocks within like 5 or 6 days. So pretty easy. What I would recommend is when you get started, to deposit your $100, and I know it's going to sound weird, but just plan on losing it. And you're not really losing it. Just plan on not being able to use it. You're going to use that $100 initially to learn, to mess around with. It's going to be a $100 learning training experience. Right, just as you were to invest in, or pay for a class or an online class or go to class or whatever the case may be, you're basically using that $100 to train yourself. Right, you're going to mess around. You're going to buy shares in something and watch how it changes. Watch how it changes your user interface, and just see everything that it does. And then later on in some future videos, we'll get into options trading, and we'll mess around with some options and see how that differs from just buying a normal share. Now, when you deposit that $100 into Robinhood or Webull or TD Ameritrade or whatever the case may be, you will have to fill out a request to get into different levels of trading. If you just want to do simple, get 100 shares of this stock or 100 shares of this stock or 10 shares of this stock or whatever the case may be, then just your normal level 1 trading is what you need. All right. I will tell you, you're severely limiting yourself if you only choose to do that. I personally go all the way to level 3. I wouldn't Even though some of the questions are how much experience do you have in trading, as long as you're smart and you're not going to do anything, overly drastic, like take all your life savings and put it into one stock, which I don't recommend at all. But as long as you're not going to do anything like that, and you're going to take the time to research the companies that you're going to invest in, and then you also understand how you can gain money and how you can lose money, then I would just go right to a level 3, and that will give you the opportunity to invest in or trade options. Right? And there's all kinds of options, everything from buying calls and buying puts, selling calls, selling puts, swing trades, calendar trades, vertical trades, horizontal trades, and so on and so forth. I don't want to get into too much detail over that. This is just the introductory video, but I would just go right to the level 3 that gives you the option to trade options. So that is going to be one of the decisions that you have to make right away when you're signing up, whether it's Robinhood or Webull or TD Ameritrade, Merrill Lynch, Merrill Edge, whatever broker you decide to go with. But you will have to let them know what kind of account that you want, and then you will have to request, kind of requesting permission to actually do the different types of trading, options trades, and so on and so forth. Now, once you've made those deposits, they've gone through, and if you've requested the type of account that you want, you'll be able to start trading. And like I said before, I would recommend you just start with $100 and you find a stock that you like. At this point, probably a cheaper stock, unless you're super risky and you want to invest, $1,000 and get right into, Tesla and all the bigger name blue chips. But I would recommend starting off slow. Take $100, put it into something small. Do a little bit of research on not necessarily penny stocks, because I'm not a big fan of penny stocks. If you're unsure what that means, a penny stock is really any stock that has a share price of less than $5 would be considered a penny stock. Now, don't get me wrong, I have plenty of penny stocks that I'm invested in, and penny stocks can definitely grow, and they can go on exponentially, and they can go right into a parabolic change, and we'll talk about that later. But they're not as reliable as your big name your big name companies, in my opinion. They can definitely become big name companies and become very low risk, good companies. But for now, I would say if you're beginning, take that $100, invest it into a company that somewhere has shares between $10 and $20. Just get a couple shares, see how that changes, see how that changes over the course of a day, over the course of the week. Watch it, just to get familiarized with the user interface. And actually, some of these sites too, some of these apps actually give you the option to paper trade. I've never done it. I've never actually have any experience with paper trading. But Webull, for example, and TD Ameritrade all have these. You can choose to trade on paper, and you get a certain amount of money to start off with, and you can actually use that fake money to invest, and you can see how that outcome will be. Also, maybe an option. Me personally, I would just say throw in $100 and play with it, and you never know, you might get lucky and turn that $100 into $400. And that's another topic for discussion later as well. We'll get into how to easily turn $100 into $200, $200 into $400. After that, it starts getting a little bit more difficult. It's not as easy, and the risk is more. But that's turning $100 into $200. It's a lot easier than you think. And I'll show you in different ways that you can do that in future videos. All right, so now that we've got the broker So we've chosen a broker, we've done our deposit, we're actually in there. I think the next big thing to know are different terms that you might hear or might see around the stock market. Knowing those definitions, knowing what they mean. I'm going to use a bunch of them. I've already used some that you might not have quite understood. So I'm going to go through. We're going to talk about a few of them, and I wrote them down. Some of the more common ones that you'll hear on a regular basis. So, all right, so let's get started. So the first one is a buy, and what does a buy mean? Well, buying simply means I'm taking a position to buy shares in that company. Likewise, sell. Sell means I'm getting ready to get rid of the shares that I've already purchased, either because I've achieved my goal, I've made money, or I want to minimize how much money I'm going to lose. A lot of times, I've heard some pretty smart people, in my opinion, they say the way to make sure you make money in the stock market is to one, don't get greedy. Sell off the shares when you're ahead, when you feel happy with the amount of money that you've currently made. But more importantly, know when to sell to minimize how much you lose. I've made some pretty good money in the stock market, and I've lost my fair share, and you can easily lose quite a bit of money, right? A lot of money to some people, $1,000, right? You can get to the point where you lose $1,000 in the course of just a couple minutes, and I've definitely been there. I've had very positive days, and I've had very, very negative days. It's definitely in order to be successful, it's how to minimize those days of losing a lot. And the way that you do that is by knowing when to sell. There's different options that you can do to minimize your loss as well. A stop loss. A stop loss is after I buy certain amount of shares and say that those shares go up in price. So I'm making money, but then just like everything will eventually do, the share price starts to come back down, right? I can do a stop loss. And stop loss I can either do at a certain value, right? If I bought the shares at $50 and they went up to $60, I can set a stop loss at $55. And if the share price drops below $55, boom, it's going to sell those shares. I can do what's called a trailing stop loss. Trailing stop loss means it's by either a certain dollar amount or actually by a percentage. So as the share price goes up, my trailing stop loss will also go up. A lot of times I'll set up trailing stop losses for 5%, 7.5%, 10%, 15%, whatever percentage you feel that you want or you feel happy with, 10% for example. As the share price goes up, so say I buy 100 shares of company X at $50 per share, that's $500, and it goes up to $60 a share. So now I'm up with an equity of $600. And I've set myself up with a trailing stop loss of 10%. All right, so initially that $50, or 10% of that is $5. So it'll be $45. If the share price were to drop $5, drop below $45, then boom, my shares would sell. But in this case, it went up. All right, and got to $60. I still have that 10% trailing stop loss. So if the shares start coming back down and drop 10% or $6 and drops down to $54, boom, my shares would sell. That is a great way to make sure that you're minimizing the risk of your portfolio. Just recently, for example, there was a huge cutback on this stock called NIO. I'm very bullish, and we'll learn about that here momentarily, but I'm very bullish in NIO. I believe in the long-term outcome of NIO. And but it recently had this very, very large consolidation, a drop in share price. It skyrocketed up in a parabolic manner, and then it immediately came back down greater than 25% in price. And luckily, I had my trailing stop loss high enough that that when it started to come down and drop price after about 5%, all my shares sold, and they kept on going down, 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 got down to $39, and then started going back up, and that's where I rebought back in. Right, super successful story there. It can be the difference between losing a whole bunch of money and gaining a whole bunch of money. And ultimately, in my scenario, I sold high and I rebought back in low, and I didn't make any money because I just put it right back into shares of NIO, because I am very bullish in NIO and I believe in it long term. So I just used all of those profits and reinvested it into more shares. So ultimately, long term, down 3, 4, or 5 years from now, should have a pretty good amount of money in those in that company. Okay, so that was selling. Now bidding. Bidding is what you are willing to pay for a stock. Right? So when you buy a stock, you are bidding for that stock. You are buying at a certain price. You can do it two different ways. You can do it as a market bid, or you can do it as a limit. Market is whatever the market price is, whatever the current share is, and whatever your broker gets your buy-in at. All right, so if you're following and you see company X at $50, and you click buy 10 shares, you're going to buy the market price, which is $50. Or you can set yourself up with a limit order, which is you setting the price that you desire. Right? So if it's at 50 and I say, I think it's going to come down a little bit, so I might set it up for $49.50. Well, as soon as the share price hits $49.50, your order will go through and you'll buy however many shares that you purchased, and that was because of the bid price that you asked for. So going to ask on the other hand, that is what people selling the stocks are looking to get for their shares, right? So it's me asking for a certain price. I might, for that share that's $50 of company X, it's $50. I might be bidding $49.50, but somebody might be asking for $50.50. All right, so that is your bid ask. You're bidding and you're asking. With that being said, there's a bid-ask spread. The spread is that difference between the bid and the ask. In the case that I just gave, that bid-ask spread will be $1. Now, understanding that bid-ask spread will be important later on when we go into different types of option trades. And that one way that I talked to you, how it's really pretty easy to turn $100 into $200, deals with what we call a vertical spread and really brings that bid-ask spread into play. All right, so other common terms, bull and bear. You'll hear, oh, I'm bullish, I'm bearish. There's a bull market, there's a bear market. So it's really easy to understand. A bull market is when the stock prices are going up, and a bear market is when the stock prices are falling. That's it. So when I say I'm bullish on NIO, for example, I believe NIO is going to go up. If I were bearish on NIO, that means I believe NIO is going down. That's it. All right, so we talked about buys, bids, sells, asking, spreads, talked about limit orders and market order. There's other things like good till canceled order, which basically means that I can put in for a limit buy for shares of company X. And it won't happen until that price actually hits whatever I'm asking for, right? Whatever I'm bidding for. So for example, say company X is at $50 and I don't want to spend $50 on per share on this company. I say, I'm pretty sure it's going to go down to $48 at some point between now and the next couple of weeks. So I might say, okay, I'm going to put in an order, good till canceled order for $48. And it'll be until the share price goes down to $48, nothing will happen. But once the share price goes down to $48, then however many shares that you bid for, that's when you'll actually purchase those. And that's a good till canceled order. The other one is a day order. A day order means that the order is only good for the day that you placed it. And typically, the stock market is open from 9:30 to 4:30. All right. Now that does change with holidays, and it's only Monday through Friday and things like that. So there are a few variations, and there are also extended hours of trading in the pre-market and so on and so forth. And we'll get into those later. But for the most part, a day order means that if you place an order for a day order, it'll end at the end of that day. Once the market is closed, then that whatever order you made is either executed before that or it goes away and is canceled. For example, if that same company X, if I place a bid for a share of company X for $50, or it's at $50 and I say $49, and during that day it never drops to $49, then at the end of the day it's canceled. All right, and then I'll have to actually go in the next day if I still want to buy it. All right, so let's see what else we got. Next one on my list is volatility. Volatility is simply how fast a stock moves up and down. You'll see some companies are extremely volatile. Let's see, a good example would be like Tesla or Bitcoin right now. Like the volatility, NEO is also a very volatile stock right now. The price is going up and down in upwards of 5, 10, 15% daily. That is a highly volatile stock. So other stocks that are not as volatile, things like Johnson & Johnson, for example. Johnson & Johnson is a low volatile stock. Put shares in, it's going to go up a little bit over the course of time, right? But nothing huge. Same thing for like a lot of your long-term ETFs and things of that nature. But each stock, each company has a certain level of volatility, whether it's low, medium, high, and based on that volatility, you can make different choices. Me personally, I love high volatility stocks. That's where I think I make the most money in, at least short term. Long term, I don't want to be in something that's high volatile long term. I want to make sure that my investments are less risk over my long term, and then I'm going to make I might not make 30 or 40% over the next year or two, but I'll definitely make 10, 12, 13% or whatever the case may be. All right, so and that's all based on volatility. Let's see what's next. Let it go. Liquidity. How easy you can get into and out of a stock. All right. Yeah, that's about it. Right. That kind of goes along with like trading volume and things like that. Trading volume is the number of shares being traded each day, and if it's something that has like is in a high liquid state, then it's easily traded, and it's traded. The volume that is traded is a lot over the course of a day. Right now, there was a a tweet by Elon Musk that simply said something like, "How about Doge, DOGE?" Right? That's a cryptocurrency. Since he made that tweet, the trading volume for Dogecoin or Dogecoin, however you pronounce it, is huge. And actually, we can bring up. I will bring up the chart for it here in just 1 second. All right, so like I said, I brought up the chart for Dogecoin, and you'll see that, so this is set up in 5 minute. So we'll move this to like 30-minute. We'll take a look at the 30-minute scale. But you can see how much, well, my computer's running really slow right now. But how many shares are being traded? Very, very high right now. Definitely higher than normal, and how much it has been. So that is the trading volume. As you can see, quite a bit of trading volume going on right here. This is just recently. Like I said, I'm on the 30-minute chart here. So each one of these candlesticks, these are called candlesticks, are 30 minutes long. All right. And you can see that the amount that we are, the amount that is being traded at that point is very high. And the fact that it's been quite a bit of trading over the past day, you can definitely tell where where Elon Musk made his comment. And if you change it to the day view, you can see this is right about the point where he made his comment. He made his tweet, say, "Hey, what about Doji?" And next thing you know, trade volume went right through the roof. I was lucky enough to get in right about here, right about that 0.006 mark. Got a couple 100,000 shares, and took advantage of that nice rise up. And we'll ride this out. We'll see how far it goes. It's probably going to. I mean, it's already kind of blasted right through a parabolic shape right into a vertical step. So it's really going to be just a matter of watching our indications, which I'm not going to get into too much right now. That's going to be for a later time, but we'll go through that later on different indicators on when the best time to sell is, when the best time to buy is, and what the future looks like for different patterns, whether it's a bullish flag or a bearish flag or pennant, and all these different terms that we'll learn about over the next few videos. All right, so that was trading volume. Let's see. Some other terms that are commonly heard, commonly talked about, are going long, and that's that you're betting that the company's stock will increase in price so that you can buy low and sell high. All right, so going long, I would say for the long term, I'm going long on NEO. PLTR is another one that I'm pretty bullish in long term, so I'm going long on that. Let's see, averaging down, that's another one. Averaging down is when an investor buys more of a stock as the price goes down. And this kind of results in your average price per share going down. For example, I was lucky enough to get into NEO and PLTR pretty cheap, $17 for NEO and I think $8 for PLTR. So I got in there pretty early, which is definitely nice, especially when it parabolically changed up to the $50 mark. So with NEO, for example, averaging down. So say you wanted to get into it but you didn't get into it when I did. You got into it at like the higher end of that, $45 and $50. Although still perfectly fine long term, um, you want to bring that average down. So as the price came down, when it started doing that cutback and that consolidation, you can start buying more shares at a lower price, and that brings your overall average per share down. Uh, Ideally, you just buy all the shares that you want to buy at a very low price, but that's just not necessarily that realistic, and you never quite know 100% when it's going to be at that low point. So you can be smart and you can say, okay, well, I'm gonna buy 10 more shares because it went down a few bucks. Buy 10 more shares because it went down a few bucks. Buy 10 more shares, or 100 shares and buy 100 shares or buy 1,000 shares, whatever the case may be. But as you go lower, you buy more shares, and that brings your overall average per share down. Buy some more stocks lower, that brings your overall average for per share down. And ultimately, if you're holding on to something long term, 2, 3, 4 years down the road, you're going to get more out of your average share than if you just bought all your shares high. So, and it buy low, sell high, right? Just averaging yourself down. All right, what else do we have? IPO. IPO is another common thing that you'll hear, and I will tell you, IPOs this year have been crazy. And I guess I should say last year, 2020, some big IPOs came out. Airbnb was one of them, and it was so big that I even couldn't get into it. I thought I had set myself up pretty well to get into it, but I didn't. So IPO, what is that? It's an initial public offering, and it's when a company becomes publicly traded, right? So initially they're private, and then they go public in order to raise money for their company. Some of the big ones that have come out recently. So let's see. There's been Airbnb. A good one that's coming out soon. Roblox. Wish, Affirm. These are all IPOs that have either recently come out or are getting ready to come out. I personally am hoping to get into Roblox. I think Roblox is going to be huge. Again, I'm not a financial advisor. I'm not telling you to get into it. However, I would highly recommend that you do the research, you learn about the company, take a look at Roblox. Roblox is a very good opportunity, I think, to get into their initial public offering, set limit orders, buy a whole bunch of shares, and see where it goes. Unity, not too long ago, was a very successful IPO. It came out, jumped up quite a bit, took advantage of that one, made a little bit of money. Didn't stick around with that one. And honestly, I probably would do the same thing with Roblox. I'd get into the IPO or shortly after IPO, try to take advantage of that initial jump and then get out of it. All right, so what are some other things? I've said it a couple times already, blue chip stocks. Blue chip stocks are typically large industry leading companies, right? So your NVIDIA, your AMD, your Microsoft, your Google, Netflix, Tesla, right? These big name companies, those are your blue chip stocks. We talked about penny stocks before. Penny stocks are any company that the share price is less than $5. Blue chip stocks are typically, significantly higher. Facebook, Google, Amazon, those are your real blue chip stocks. Forex is foreign exchange, right? So it's the transferring and trading of different currencies, whether it's the USD, Canadian, the Thai baht, just whatever foreign exchange you can think of, transferring from yen to USD to AUD and back and forth, a way to make money. Just another another way to use the stock market to exchange currencies. All right, another one you'll hear about is hedge funds, mutual funds, and ETFs. Hedge funds and mutual funds are two different types of investment accounts that you can buy into. They turn around and invest your money into dozens, hundreds, or even thousands of different stocks. ETFs are exchange traded funds. They're like stocks because you buy and sell shares, but they're also like mutual funds because they track an index, right? So, and there's all different types of ETFs. You can get them specific to a type of something that you're interested in. For example, right now I've got quite a bit involved in or quite a bit of involvement into the electric vehicle side of things, right? So Tesla, NIO, XPeng, Lee, PLTR, Blink, right? The charging, and all the way down to the different types of material that you're using, whether it's like lithium and anything like that can be tied into an ETF, and you would be getting like the electric vehicle ETF. And there's all different kinds of options out there. Again, do the research. ETFs, I think, are a little bit less risk, not necessarily as much reward. But one of the things that you'll hear throughout many videos that I provide is the importance of spreading your portfolio, right? Diversity, to lower the amount of risk, the more diverse you should be, right? ETFs are already a way that you can diversify your portfolio and minimize the amount of risk that you might have. All right, some other things we can talk about. Broker, we've already kind of touched base on a broker, but that's a person who buys or sells an investment for you in exchange for a fee. Nice thing about like Robinhood and Webull there is no fee for your exchanges, but they do take different percentages, and you have to, if you want to use like the Robinhood Gold, for example, it's a $5 monthly fee and things like that. So you're kind of paying for the use of the app vice the price per exchange. So it all depends on what you like. Some places offer unlimited trades for like $6 or $7 or something like that. But I've got to the point where now I'm just using Robinhood and Webull, and I just trade whenever I want to, which is kind of nice. Day trading. Day trading is probably a word you've heard quite a bit, and it's just simply the practice of buying and selling within the same trading day. So once the market opens, you start your trade, and before the market closes, you end that trade. There are limits associated with day trading, especially with with like Robinhood and Webull, and you have to make sure that your account has at least $25,000 in it, or you can kind of get like suspended from day trading. I'm not typically in heavy with day trading. Every once in a while I'll find myself doing it, but usually I try to set myself up for something a week out, 2 weeks out, 3 weeks out, and then ultimately in my low risk profile and my retirement fund for later, it goes out 2, 3, 4, 5 years down the road. So yeah, but we'll definitely talk about some day trading and some day trading techniques and strategies and things to look at. It's very fast paced. It's significantly more fast paced than normal swing trades or options or things like that. But anyway, I digress. We'll take a look at that in future videos as well. Some other things, dividends. All right, this is a portion of a company's earnings that is paid to the shareholders, the people that own the company stock. on a quarterly or annual basis. Some companies have better dividends than others. Some companies don't have dividends at all. It really depends on whether or not they actually make a profit throughout the course of a year. Right. Again, something that is great to diversify your portfolio is having some companies, investing in some companies that provide dividends, and possibly even rolling some of those dividends back into more shares. A good example for me would be like Johnson & Johnson, right? Been investing for years in Johnson & Johnson, taking those dividends, rolling them back into shares, and they just make more shares, invest more throughout the year, make more dividends, roll those dividends back, and then your amount of shares just build. And on top of that, the price of Johnson & Johnson slowly rises throughout the course of the year, and next thing you know, your dividends are making more money for you. So it's a great way. It's a great thing to have to build up your long-term investments. Right? Let's see what else. An exchange is a place in which different investments are traded. Obviously, the most well-known in the U.S. are the New York Stock Exchange and the NASDAQ, right out of New York City. I've found that the further you are from New York, the more difficult trading can be and more time that it takes. I know it sounds silly, but right now I'm in Japan, so the stock market for me opens up at 11:30 at night. It's kind of a pain, and I've found that if I'm really trying to do day trading, it's a little bit more difficult because it's more slow. Right? I'm not getting that immediate information to the stock exchange and back. So what I think, if I'm placing a market order, that market order might not be the same that what I see to what is actually being executed. So just something to take note of. But yeah. All right. What else do we have? Margin accounts. All right. So this is a great thing for people to understand and know, especially if you're just starting out and you're beginning. A margin account lets a person basically take out a loan or borrow money from a broker to purchase an investment. Right. When I first got started, I used a margin. Now you just got to be smart about it and understand that you are quite literally taking out a loan. All right. Might not be bad at all. All right. I think Robinhood and Webull, for example, they just charge you a small percentage monthly for your margin account. And basically how much that you borrow, you have to pay a small percentage of that. If you borrow X amount and you have to, it's a $10 fee or whatever the case may be, as long as you make more than $10, you're benefiting, in my opinion. So margin isn't necessarily a bad thing, but understand that it is just like a loan. And you don't want to get to the point where you're in a margin call, basically where your portfolio drops down to a certain amount below your margin maintenance amount. If that's the case, then you'll have to take action. You'll have to sell off something or make a deposit to make sure that you're ahead of that margin maintenance point. So what else we have? I'm trying to think, going by alphabet. What other M's do we have? Moving average, that's a good one. Moving average. You'll definitely see that when we get into looking at different charts and different trends associated with stocks and with the share price, and what that moving average is. You'll hear me talk about the 9-day moving average, a 50-day moving average, 200-day moving average, and how that can relate to the share price itself. You'll hear me talk about resistance and support lines, and how that moving average can play into the resistance and support lines. You've heard me say it many times. Portfolio is just a collection of investments owned by an investor. I have a few myself. Short-term, high risk, long-term, low risk. I've got one that I'm kind of just playing with. I've got one that I'm using that I'll use in the future to show everybody examples of. So different portfolios that you have, depending upon what you're trying to get, what your goals are. That's a portfolio. Stock symbol or a ticker symbol. You'll hear me say that quite a bit. That is just the kind of like the nickname of a company. Some are easy. NEO, for example. NEO is NIO, right? The ticker is NIO. Tesla, TSLA. Apple, AAPL. Those are all the ticker symbols. And when I'm actually going on to TradeView, or I'm looking at the chart, what I'm actually looking at, how I'm going to find that specific company and look at how the share price are. That pretty much covers some of the major definitions that you'll hear. If you ever have any questions or are confused about something, like I said before, drop a comment, ask your question. I've got a Discord, I've got Twitch, and I've got the YouTube. You're more than welcome. That's what I'm here for. Like I said, I'm not a financial advisor, but I'm here to provide as much training as much training and teaching as I can about trading. So if you have any questions, please feel free to leave them. I think this pretty much covers what I wanted to cover during this video. The next videos that we'll talk about, we'll get into some actual bringing up charts. We'll talk about options and things like that, the different types of option trading that we can do. And I'll leave this video with a little bit about myself. I am still active duty in the Navy. I'm looking to retire here in a few years. I am over 20 years, going on 21 years. So I've been in for a while, a lot of experience, been around the world, which is pretty cool. So if you ever have any questions about that, please feel free to ask me whatever you want. I've learned a lot over the past few years, especially in the stock market. I've learned a lot over the past few years about life in general. I am looking at retiring here very shortly. I've got my nice retirement set up from the Navy, and I'm looking at the stock market to build a separate retirement. And here shortly, I would say within the next few years, I'll probably get more into the day trading side of the house and using the day trades to fund a longer term trading, and hopefully build up a small fortune over the next 3 to 4 years. Once I get ready to retire, probably in, like I said, in about 4, maybe 5, maybe 6 years or so, I don't want to work again. So the ultimate goal for me is really build up my portfolios that I have here. Be nice to be able to turn $100 into $1 million. I'm not saying that'll happen, but hey, you never know. So follow me, like, subscribe, join me in the Discord, join me in Twitch, and let's make some money together. All right. And so like I said, have any questions, drop them down, and I will see you in the next video. Later.